Coming up on Market to Market. The harvest rolls on despite weather delays, storage concerns, and anxiety over low prices. Critics file a lawsuit hoping to block a product combining two popular herbicides into a new weed killer. And we'll reminisce on a few key developments in rural America over the past 40 seasons of Market to Market.
I want my checkoff dollars back! Yeah!
Those stories and market analysis with Virgil Robinson next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, October 24 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. U.S. consumer prices barely moved last month as the threat of inflation remained benign. The Consumer Price Index rose a minuscule 0.1% in September, due largely to the third straight monthly decline in gasoline prices. Food costs, however, rose 0.3%. Beef prices, for example, jumped 2% in September and have risen nearly 17% since January. Even core inflation, which excludes the volatile food and energy sectors, inched up just 0.1 point, indicating that overall, inflation is just about non-existent. Notions of record corn and soybean production are keeping a lid on those prices as well. But thanks to favorable yields, most growers will at least have more bushels to sell. Prospects for increased yields next year were bolstered last week when the EPA approved a new herbicide combining two existing weed killers. This week, however, critics filed suit seeking to block the rollout.
The Enlist weed control system has been approved.
It took less than a week for a lawsuit to arise in response to the government's October 15th approval of a new herbicide that combines two existing weed killers. Last week, the Environmental Protection Agency approved the use of Enlist Duo, which combines the existing herbicides glyphosate and 2,4-D for use in 6 Midwestern states. However, the EPA placed restrictions on its use, hoping to get farmers to adhere to the best use practices to avoid increased numbers of herbicide-resistant weeds. A coalition of environmental groups and small farm organizations responded to the EPA decision by filing a lawsuit this week, attempting to block the commercial release of Enlist Duo. The lawsuit, however, was filed in federal court in California, which is not one of the states in which the herbicide's use is permitted. But the Associated Press described the court as being one that is more comfortable for the groups listed in the lawsuit. The plaintiffs include Beyond Pesticides, the Center for Food Safety, and the National Family Farm Coalition. The groups are concerned the approval could lead to increased use of herbicides, exacerbating the problem of resistant weeds. Some experts say that certain weeds are naturally resistant to glyphosate, also known as Roundup. Those weeds survive spraying, then go to seed and spread the following year. Rotating glyphosate with some older chemicals that U.S. farmers had moved away from is seen as a possible solution. Researchers like Peter Dautre at Texas Tech University are looking into the superweeds with funding from many sources, including Dow AgroSciences.
Really what we're doing here is we're creating an opportunity to use some older chemistries with different herbicide modes of action relative to Roundup that should help in our fight against some of these resistant weeds.
But critics, who in this case have become plaintiffs, say the EPA-approved chemical has a negative impact on farms and the environment. In a statement from the Center for Food Safety, Iowa corn and soybean farmer George Naylor said, quote, "American farmers and our families are at risk. 2,4-D is a giant step backwards. It's just a terrible idea." The United States followed Canada in approving Enlist Duo, but Dow AgroSciences, which sought approval for the herbicide's use with genetically engineered corn and soybeans, is required to report to the EPA on how weeds respond. Dow must also educate growers about its proper use.
Certainly the concern is, are we just going to shift our reliance from Roundup to some of these herbicides? And my hope is certainly no, that we're going to use these new technologies in conjunction with what we already know. We'll have some activity in some of these weed populations.
The use of Enlist is already approved in Illinois, Indiana, Iowa, Ohio, South Dakota, and Wisconsin, and it will be reviewed in 6 years. The government is also considering approval in 10 more states in the Midwest and South. As Market to Market celebrates our 40th season, we've been looking back at some of the key developments over more than 2,000 episodes of the program. Previous installments explored the early years when the Weekly Journal of Rural America covered everything from the 80s farm crisis to the rapid consolidation of key agricultural industries in the 90s. And in this, our third retrospective piece, we'll reminisce on a few events that have shaped farm country since the dawn of the new millennium.
This stands Darwin on his head. And it's important to remember, unlike chemical pollution, there's no federal recall here. FDA, the Bush administration can't call these fish back. Once they've been released into the wild, that is it. No way to stop this terrible arithmetic from happening.
I want my checkoff dollars back.
The problem you still have is a majority of people who voted no. And, you know, sometimes democracy is just one hell of a political system. It'd be nice to have an authoritarian system where you didn't have to go out to the people and ask them to give you their opinion. But in this case, we did, and a majority of the people said they didn't like it.
Family farms, yes. Factory farms, no.
For America's cattle producers, 2003 has been one for the record books. Tight supplies and blistering demand combined for the highest prices in history, and analysts expected favorable prices to continue well into the new year and beyond. But all of that changed Tuesday when the Agriculture Department announced the discovery of the first apparent case of mad cow disease in the United States.
This is not only a case about illegal immigration, which is bad enough. It's a case about identity theft and violation of the privacy rights and the economic rights of innocent Americans.
We make a major step toward reducing our dependence on oil, confronting global climate change, expanding the production of renewable fuels, and giving future generations of our country a nation that is stronger, cleaner, and more secure.
Preserve, protect, and defend the Constitution of the United States.
So help you God?
So help me God.
Congratulations, Mr. President. All the best wishes.
A plant that's too tall for irrigated conditions of India and Pakistan, but under the dry or semi-dry conditions of Afghanistan is probably what you want.
There can be no permanent progress in the battle against hunger until the agencies that fight for increased food production and those that fight for population control unite in a common effort.
And that's why we are here today, to sign a bill into law that closes a long and unfortunate chapter in our history.
What do we want?
Justice!
When do we want it?
Now!
What we found overall was a 32.5% increase. This is the largest increase that we've ever recorded. The previous high was in 1973, and that was just a little over 31%.
It takes a lot of sometimes youth and enthusiasm along with capital in order to build that cow herd. And sometimes youth and enthusiasm don't always come with the capital.
No, I didn't think this industry would be where it was 6 months ago today. We keep having to recreate ourselves. The expansion, the ability to take a basin that's producing 100,000 barrels of oil a day and now go to probably 450. This is serious oil. We're just getting started.
Dry.
Yeah, they're dry.
The ponds and the creeks are dry.
There's nothing in them.
Yeah, there's some actually years ago. You know, they swampy areas, but they've through the years kind of developed creeks that I did not see go dry in 1988, and they're dry today.
America experienced a setback this week when Mark Pearson, the very heart and soul of this program, passed away. Hosting Market to Market for more than 20 years, Mark was a tireless advocate for agriculture, and he never passed up an opportunity to educate others on its importance.
The Weekly Journal of Rural America.
Hello, I'm Mark Pearson.
And just as farmers often pass their operations down to the next generation, Market to Market will do the same. Grinnell, Iowa businessman and farmer Mike Pearson will follow in the footsteps of his father as the new host of Market to Market.
The Weekly Journal of Rural America.
Hello, I'm Mike Pearson. I'm honored to follow in my father's footsteps.
The yeas are 216, the nays are 208. The bill is passed.
Mr. Speaker, I object to this bill because this bill is not just going to create tension among us, but the people of this country who depend on us.
At the end of the day, this is really about saying, look, a year ago, we were talking about 103 barns in operations. Today, we're talking about 4,700. We have over a $5.5 billion export market for pork. Why would we want to jeopardize that?
Next, the Market to Market Report.
Thus far, October has been friendly to agricultural commodity markets, and grain futures contracts extended what is now a 4-week rally. For the week, December wheat gained 18 cents, while the nearby corn contract moved a nickel higher. Harvest delays in the U.S. and arid conditions in Brazil were friendly to soybeans as the November contract advanced by more than 25 cents. Nearby meal prices followed suit with a gain of $19.70 per ton. In the softs, cotton reversed course again this week and rallied 81 cents per hundredweight. In the dairy market, November Class 3 milk lost 81 cents, while the deferred contract declined by 75. Over in livestock, prices were mixed as the December cattle contract gained $1.85. Nearby feeders advanced by 50 cents, but the lean hog contract gave up 33 cents. In the financials, the euro gained 39 basis points against the dollar. Crude oil continued its free fall as the November contract settled with a weekly loss of $1.74 per barrel. COMEX gold declined by $7.20 per ounce, and the Goldman Sachs Commodity Index lost nearly 3 points to settle at 537.5. Here now to lend us his insight on these and other trends is one of our regular market analysts, Virgil Robinson. Virgil, welcome back.
Thank you, Mike. Nice to be with you.
And we're glad to have you. Let's talk about the wheat market this week. We've seen a nice rally. We're seeing a little bit of stability up just a little over a penny here on the December contract. Have we found a price at which foreign buyers are interested in U.S. wheat?
Well, I don't think we've struck equilibrium, Mike, but we've had some issues. Winter wheat seedings here in the U.S. are lagging their 5-year pace or 5-year average pretty significantly. Illinois, Indiana, Michigan, Missouri come to mind, Mike. So clearly that's a concern. There's also some concern in parts of the former Soviet Union regarding weather issues. So we've had a couple of catalysts that have provided some spring in the futures contracts, and I think provided an opportunity for those who need to make some sales to do exactly that.
Because looking at particularly the slower planting pace in the U.S., that could be remedied fairly quickly if we get a spate of dry weather. Is that the general concern? We'll see prices tail off?
We need to advance the harvest in those states I mentioned, Mike, because this wheat crop will come in right behind those. So if we can accommodate that, and it appears like we have an opportunity in the next couple of weeks to do that, I think we'll get all the winter wheat sown that we want to. Globally, again, every time there's a tender, there seems to be quite a number of origins fighting for that business, including Argentina, Brazil, the Black Sea region, and us. So, Mike, the competition has not subsided. It remains pretty intense.
We are still looking at a lot of wheat on the global scene.
We are at present.
All right. Well, let's jump down into the corn pits. As we take a look at this week, we're seeing it seems to be a fairly surprising October rally. We're up about a nickel on the week here for December corn. Are there still some legs in this market?
Mike, I'd like to bring to the attention of the listeners some factors that have probably contributed to the strength here in the month of October. We're lagging harvest pace, our 5-year average, pretty significantly. Now, we've probably made some inroads this week. As you mentioned, parts of South America are concerned about drought, and one of those regions happens to be the sugarcane region, where, of course, they produce cane for ethanol production. So the assumption is, should that continue, then we might well be the recipient of some ethanol export business that is not currently being forecast. We've also had some export sales that have been relatively strong, and that's good. But to suggest we've the catalyst here for a significant price advance, I would stop short of saying that. So for those, and I'll just assume I'm speaking to those that have done to this point nothing and have no storage, Mike, I think this is an opportunity to go ahead and make some sales.
For those with storage opportunities, do you still like the storing unpriced bushels, or would you make some sales in the deferred months?
I think you have to capture the carry, Mike, and as we visit, my recollection, I think the December-July of 2015 futures spread is about 30 cents, which is about 72 or 3% of full carry. So clearly, I think if you have storage, a storage hedge is still, in my mind, a better opportunity than storing without any protective devices in place, Mike, because again, I still think there's risk in the corn market with regards to prices over the next several weeks.
Now, when this harvest was just beginning, back here 6 weeks ago, and we were hearing tremendous yields reports out of the South, out of the Delta, even out of Southern Illinois and Indiana, there was concern that as we moved north into the West, we got into the areas that were very wet. In your conversation or in talking about the market, does it appear that yields are still going to be solid as we get farther north and west?
I think there'll be some areas, Mike, that choose to let their corn stand in the field for an extended period of time, and there's, of course, an exchange there, a trade-off. You choose to do that, you may well lose some bushels, but clearly you alleviate some of the drying expense and some of the cumbersome processes associated with a big wet crop. To suggest I have a good feel of what yields will be universally, I can only tell you that most models that I have privileged to see continue to suggest an awfully good aggregate yield.
All right, so coming back to, if you haven't done anything, here's an opportunity to make some sales.
Mike, I think it is. I just don't sense there are many other opportunities without undertaking a big risk moving forward.
All right. Well, as we jump into the soybean market, interesting market to watch this week in particular. We've got a question from Tim in Crookston, Minnesota, and Tim submitted this on Facebook. Market to Market is on Facebook and Twitter. Please check us out at Market to Market, or you can follow us at IPTV Market, hashtag IPTV Market. Tim's question is, bean harvest is half done, yet we've seen beans rally. Is it safe to say the harvest low is in for beans? Does it look like, from a seasonal perspective, we might be through the low point of this?
I think his term, safe to say, I would stop short of that, Mike. Again, I think there have been some very specific reasons as to why the bean market has performed like it has. The pace of harvest is slow. There's some concern about weather conditions through much of the South American growing regions. Now, the forecast, or at least the last that I saw, could potentially change things beginning as early as this weekend, Mike. So, you know, Sunday night, Monday morning, hold on to your hat. There could be quite an explosive reaction in the futures market. I think, again, one of the factors that's really not gotten a lot of conversation is the fact that processing margins, at least the way I track them, Mike, tonight are almost twice as good as they were 1 year ago. And I think that underscores the concern regarding supply and how small supplies were as we ended last crop year and began this one. Farmers to this point, producers to this point, I think have been relatively strong to hold on to their soybeans. And again, I think that's paid dividends in combination with other factors, and we've rallied 75 or 80 or 90 cents from recent lows. But to say we have a seasonal low, do I think that's a safe statement to make? No, I do not. I still think there's risk in this market moving forward. So here again, if you've made few or no sales, I would use this as an opportunity to get started.
Okay. Do beans represent the same opportunity in storage as corn does, or would you allocate storage space to corn this year?
Right now, the carry is in corn. There is carry in soybean futures and in the cash markets, but not nearly to the same percentile. So the return to storage is still tilted towards corn.
All right. Well, let's jump into the livestock markets. We had the live cattle market. It was interesting again this week. I believe October cattle set an all-time record high, up at $170, maybe a little bit north of there. Is this market going to cool off soon? Virgil, what are you seeing on the demand side?
Well, this afternoon's cattle on feed report, Mike, was really no game-changing numbers, I didn't think, in that report, but clearly it indicates the number of fed cattle available for slaughter moving forward remains, at least as measured by last year and the 5-year average, much smaller. Now, they are growing these cattle to much larger weights, and that's offset the lack of numbers to some extent, Mike, and we need to acknowledge, and I think this is fairly common, but broiler production, excuse me, and pork production, not only in the U.S., but in other growing regions of the world, is on the incline. So at some point in time, that competitive factor will intensify. One other kind of sidebar, I did note the other day in the cold storage report that month over month, beef inventories actually grew 7% month over month at a time where you're talking about all-time high retail beef prices. Not a particularly good time to be storing inventory. That might suggest that export sales and even domestic sales have slowed, Mike. So there are some warning signals beginning to surface in that particular commodity. Put strategies, I think, come to mind. For those who are placing cattle, even though feed costs have come down significantly, replacement costs have not. break-evens are unusually high, so be advised moving forward, there's clearly some danger involved.
Now, you mentioned break-evens being very high, and of course that's been pulled higher by feeder cattle prices as corn has fallen, and feeders again this week up roughly 50 cents. Same story there. Are we going to see feeders continue to climb while this fat market climbs?
Well, again, whenever you send a price signal the likes of which you just referred to across the globe, it normally creates a reaction. So over the course of time, I would expect an increase in the availability of feeder supply, but not overnight. Mike, it takes quite a long time to recharge that pipe. But understand, we're not unique to that signal. There are other regions of the world that will try and respond to it as well. But at present, Mike, the number of feeders and the availability of feeders remains very, very tight.
Now, you mentioned the increase in pork production around the globe. In the U.S., the pork futures, at least, are staying relatively stable. Do you anticipate that to continue at least through the end of this fourth quarter?
I do. Again, the lean hog index is priced at a pretty significant premium to not only the December futures contract, but February forward. And again, I don't sense one of two things will have to happen. Either that lean hog index is too high, or those futures contracts are too low, or some combination of the two, Mike. And if we sustain relatively strong, and I think we will through the balance of the year, beef prices, I just can't sense pork prices tumbling out of bed. So I think they'll remain pretty solid through the balance of this year into 2015.
All right. Well, Virgil, thank you so much for taking the time to be with us this weekend.
My pleasure, Mike. Thank you.
That wraps up this edition of Market to Market. But we will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll soar into the wild blue yonder to learn how drones are helping producers maximize yields. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.